Welcome to this month's Tech Roundup, where we cut through the noise of nonstop headlines to bring you the stories that really matter. August was packed. NVIDIA's blockbuster earnings reminded us just how powerful the AI boom still is, even as signs of a reality check emerge. Apple and Adobe turned to Google Gemini, proving alliances are reshaping the industry. Robotics dazzled on stage in China, but revealed how far humanoids still have to go. And from new creator tools like VO3 and Qwen Image to looming battles over encryption and digital taxes, the future of tech feels closer and more contested than ever.
AI's reality check.
This month, the most important story in technology isn't a shiny new gadget or a dramatic breakthrough, it's a reality check. The artificial intelligence boom, the force driving markets, shaping policy, and fueling imagination, is starting to show its real contours. And nothing captures this better than NVIDIA's earnings. NVIDIA, the undisputed engine of the AI revolution, once again delivered eye popping results. Revenue surged, up 56% year over year, on the back of demand for GPUs that power today's biggest models. For many, this was proof that the AI wave is still roaring ahead. But beneath the surface, analysts are asking tough questions. Can this growth really continue at the same pace? Or are we already seeing signs that the infrastructure buildout is approaching its peak? And here's the market twist. Despite record breaking results, NVIDIA stock dipped around 3% after hours. Investors appear to be pricing in valuation concerns and China related risks. Regulatory and geopolitical uncertainties are weighing heavily, even as the company remains dominant. NVIDIA is part of the so called Magnificent Seven, with a market cap north of $4 trillion. It's still the heartbeat of the AI economy, but that heartbeat is under scrutiny. Meanwhile, competitors tell a quieter story. Marvell, a major chip maker that benefits downstream from NVIDIA, posted more modest results. That's a reminder that not everyone in the ecosystem is sharing equally in the gold rush. And AMD, another peer in AI infrastructure, is seeing lower growth. It's benefiting from the wave, but not capturing the same upside as NVIDIA. Let's widen the lens. Alphabet, trading around $213 per share with a market cap of 2.1 trillion, continues to benefit from its AI investments. Its strength in search and cloud exceeded expectations this quarter. On top of that, a $10 billion cloud deal with Meta signaled growing confidence in Alphabet's AI capabilities. Its financials remain solid, with a PE ratio around 18. Meta Platforms is hovering around $739 per share, with a market cap of 1.86 trillion and a PE of about 26. The company posted a 38% surge in earnings per share, fueled by AI infrastructure spending. But it also froze hiring in its AI division. That, combined with new partnerships like Midjourney, shows shifting priorities and a cooling of the once relentless AI arms race. On the product side, OpenAI's GPT-5 finally launched. Technologically impressive, yes, but early feedback has been mixed. OpenAI admitted to roll out mistakes and had to make quick adjustments. At the same time, surveys suggest 95% of generative AI projects across industries haven't generated meaningful revenue. Companies are experimenting, but the promised productivity revolution is proving harder to capture than the hype suggested. And that's why we're seeing alliances emerge. Apple and Adobe are leaning on Google's Gemini models for their AI brains. Meta, once committed to building everything in house, has teamed up with Midjourney for advanced image generation. These are trillion-dollar companies deciding it makes more sense to partner than to reinvent the wheel. The message is clear, even the giants know they can't do everything alone. So, what's really happening? The AI boom isn't collapsing. NVIDIA's numbers prove there's still incredible momentum. But the story of August is maturity. The easy wins are gone. We're moving into a phase where investors, companies, and consumers all want proof that AI can deliver sustainable value, not just flashy demos or sky high valuations. If last year was about dreams of artificial general intelligence, this year is about reality. Who can build revenue, not just models? Who can scale responsibly, not just hype? And which companies will still be standing strong when the flood of experiments narrows to real businesses? That's the story to watch, and it starts with NVIDIA's earnings as the pulse of the AI economy.
Strategic alliances and consolidation.
This month wasn't just about AI's reality check, it was also about survival. And survival in August came down to one thing: alliances. From Apple to Adobe, from IBM to Google, the biggest players in tech are making it clear going it alone is no longer an option. The age of strategic consolidation has arrived. Let's start with the headline grabber. Apple and Adobe are reportedly choosing Google's Gemini models as the brains behind their next generation of AI tools. For Apple, that could mean a long awaited boost to Siri and iOS. For Adobe, it's about supercharging its creative suite. And for Google, it's validation. Even rivals see Gemini as best in class. The message is simple: building cutting edge AI in house is too expensive, too risky, and too slow. Partnerships are faster. Meanwhile, IBM and AMD announced a sweeping quantum computing alliance. Their goal is hybrid systems that marry AMD's high performance classical chips with IBM's quantum breakthroughs. It's not about one replacing the other, it's about blending strengths, pooling expertise to tackle the hardest problems, from scientific simulation to AI acceleration. And then there's Google's big infrastructure move, a $9 billion bet on new AI data centers in Oklahoma, powered by renewable energy designed to handle the immense computational load of next gen AI. This isn't just about software partnerships, it's consolidation at the level of servers, power, and efficiency. Google is betting that by controlling the foundation, it can make itself indispensable to partners and customers alike. Wall Street has taken notice. Big tech already makes up more than a third of the S&P 500's market cap. Investors see these alliances as defensive plays, ways to share risk, cut costs, and keep ecosystems sticky. And for companies like NVIDIA, Alphabet, and Microsoft, each partnership only reinforces their central role in the AI economy. The message from August is clear. The AI boom isn't a solo race, it's a relay. Apple isn't too proud to use Google's models, IBM isn't too old to bet on quantum with AMD, and Google isn't too big to double down on infrastructure for everyone else to use. The winners in the next phase won't be the loudest disruptors, they'll be the ones who know how to build and keep the right alliances.
Tech regulation and geopolitics heat up. Artificial intelligence and digital platforms aren't just transforming business, they're reshaping geopolitics. August gave us two sharp reminders: the FTC urging big tech to resist UK and EU demands on encryption, and Donald Trump threatening retaliation over foreign digital taxes. Together, these stories highlight a new reality. Technology policy is no longer local, it's global, it's political, and it's becoming a front line in international power struggles. First, encryption. The UK and EU have pushed for backdoors and encrypted services, arguing it's about safety and law enforcement. But the US Federal Trade Commission drew a line. It told companies like Apple, Google, and Meta, don't comply. Weakening encryption abroad could undermine privacy protections at home and set dangerous precedents. For big tech, this isn't just a policy debate, it's a legal minefield. Comply with one side, and you could violate laws on the other. Refuse, and you risk losing markets. Either way, it's proof that tech companies are now pawns, and sometimes players, in global political games. Then came Donald Trump, signaling that if countries like those in the EU press ahead with digital service taxes on US tech firms, the US could hit back with tariffs or other retaliatory measures. These taxes are designed to claw back revenue from giants like Google, Apple, and Meta, but they're seen in Washington as discriminatory against American companies. The message was clear. The US government views the global regulation of big tech as an extension of trade policy. What started as a tax debate is now a geopolitical standoff. These aren't isolated fights. Around the world, governments are grappling with the same questions. Who controls data? Who protects privacy? Who benefits from the digital economy? For Europe, the answer is often stronger regulation. For the US, it's increasingly protect American tech champions. And in China, the approach is state first. The result is a fragmented digital landscape where companies must navigate competing legal systems, political interests, and cultural expectations, often simultaneously. So what do we learn from August? That tech regulation is no longer just about consumer safety or market fairness. It's about power, economic, political, and even national security. Encryption backdoors and digital taxes may sound like technical issues, but they're really pieces on the geopolitical chessboard. The future of technology won't just be shaped in labs and boardrooms, it will be decided in parliaments, courts, and trade negotiations. And for big tech, the challenge is clear. Innovation is global, but so are the politics.
Robotics, spectacle versus reality.
When people picture the future of technology, they often imagine robots, walking, talking, human like machines working alongside us. And in August, China gave us a glimpse of that vision with its Humanoid Games, an Olympiad for robots. The spectacle was jaw dropping, but it also revealed a sobering truth. Humanoid robotics is impressive, yet still far from ready for prime time. At the event, robots flipped, jumped, raced, even attempted gymnastics. It was designed for headlines, for social media buzz, and it delivered. The progress in balance, agility, and motion is real, machines doing things that would have been impossible just 5 years ago. But here's the other side. Most of these robots were fragile, unreliable, and heavily choreographed. They could perform a stunt once, maybe twice, but not with the consistency needed for real world use. What looks like the future on stage is often still experimental behind the curtain. The real breakthroughs in robotics aren't happening in humanoids, they're happening in logistics, manufacturing, and healthcare. Warehouse robots that move goods faster than humans, surgical robots that assist doctors with precision beyond human steadiness, delivery robots and autonomous vehicles beginning to make their mark in cities. These robots don't need to look human to transform industries. And investors are paying attention. Robotics funding is surging, but the money is shifting. It's flowing into specialized applications with clear returns. Robots that pick, pack, weld, even provide companionship and elder care. Not humanoid showpieces, but purpose built machines that solve real problems today. So, what do the humanoid games really tell us? That robotics is advancing, but the humanoid dream is still more theater than reality. The future won't be shaped by a single perfect robot that does everything. It will be shaped by thousands of specialized machines, each quietly transforming one task at a time. The spectacle may grab attention, but the real revolution is happening in the background.
Ethics, security, and infrastructure at the core.
Behind the headlines about AI models and flashy gadgets lies a quieter truth. None of this technology works without trust, security, and infrastructure. August delivered several breakthroughs that show how the industry is trying to build not just bigger systems, but safer, more reliable ones. At the University of California, Riverside, researchers unveiled a technique that allows AI models to forget private or copyrighted data, even when the original training set is no longer available. This could be a game changer for compliance with copyright law, privacy rights, and upcoming regulations like the EU AI Act. It's a reminder that ethics in AI isn't only about abstract principles, it's about engineering solutions into the core of the technology. On the hardware side, advances in 3D printed smart materials are creating tactile sensors that can give robots and wearables human like touch. That means better prosthetics, safer robotic assistance, and more intuitive interactions with machines. It's infrastructure at the biological interface, and it will matter as much as chips or GPUs in shaping adoption. South Korean scientists also demonstrated real time 6G communication combining satellite and terrestrial networks. While 5G is still rolling out worldwide, 6G aims to leapfrog into true global coverage with bandwidths that make AI powered, always connected devices a reality. It's another layer of infrastructure, invisible but essential. And then there's the foundation, power. Google announced a $9 billion investment in AI data centers in Oklahoma, designed to run on renewable energy. As AI training demands skyrocket, sustainability is no longer a nice to have, it's a survival requirement. Without clean, abundant power, the entire AI ecosystem risks hitting a hard ceiling. Investors are paying attention. Data center REITs have surged this year, riding the wave of AI driven demand. Meanwhile, chip makers and cloud giants are increasingly judged not just by performance, but by energy efficiency and compliance with ethical standards. That's why stories about AI for getting data or renewable powered facilities aren't niche. They're early signals of where capital is flowing and where competitive advantages will emerge. The lesson from August is simple. Without trust, AI can't scale. Without efficient infrastructure, it can't survive. Ethics, security, and sustainability are no longer afterthoughts, they're the bedrock. The next stage of the technology revolution won't be decided by who has the biggest model or the fastest chip, but by who can build systems that are safe, sustainable, and reliable enough for the world to depend on.
Consumer tech evolves as gateway devices.
If AI is the engine of the tech revolution, then phones, wearables, and headsets are the steering wheel. They're how billions of people will actually experience advanced computing. And in August, we saw a glimpse of what's coming next, from Samsung's new devices to leaks about Google's Pixel 10 to Meta's latest VR prototypes. Let's start with Samsung. The company is gearing up for its September Unpacked event, where it's expected to unveil a budget friendly Galaxy Buds 3 FE, a Tab S10 Lite, and possibly the Galaxy S25 FE and Tab S11 Ultra. The message is clear. Samsung isn't just targeting premium buyers, it wants AI powered features in devices at every price point, ensuring accessibility across the consumer spectrum. Meanwhile, leaks around Google's Pixel 10 series revealed the new Tensor G5 chip, 16 gigabytes of RAM, and upgraded Super AXUA displays. But one detail raised eyebrows. Google is adding a battery health assistance feature that slows charging after 200 cycles, and there's no option to disable it. To some, it looks like forced longevity at the expense of convenience. To others, it's Google stepping up to extend device life, even if it frustrates users. Either way, it shows how much attention battery technology has become in the AI era because these chips are powerful but power hungry. And then there's Meta. The company teased new high fidelity VR prototypes nicknamed Tiramisu and Boba 3. These aren't mass market products yet, but they're a window into where VR and AR are heading: thinner headsets, sharper visuals, and tighter integration with AI driven environments. For Meta, which has already invested billions in the metaverse, these prototypes are signals that the company isn't backing down from immersive computing, even as AI dominates headlines. On Wall Street, consumer devices don't always get the same spotlight as NVIDIA's GPUs or Alphabet's AI platforms, but they matter. Apple, Samsung, and Google collectively ship over a billion devices per year. Every design choice, from charging restrictions to AI features, ripples across the global market. Investors increasingly see these devices as the gateway layer of the AI economy, the point where infrastructure spending meets consumer adoption. So, what's the takeaway from August? That the future of technology isn't just unfolding in data centers or corporate labs, it's happening in your pocket, on your wrist, and maybe soon on your face. The devices may look familiar, but the brains inside them, tensor chips, AI assistants, immersive sensors, are evolving fast. Phones, wearables, and headsets aren't just gadgets, they're the gateways to the AI powered world.
In the week ahead, watch for Samsung's September Unpacked event and early reactions to the Pixel 10 leaks. Both will hint at how AI features are being packaged for everyday devices. NVIDIA's stock will remain a barometer for investor sentiment, especially as analysts pass whether demand for GPUs is peaking or still accelerating. Over the next month, expect more regulatory skirmishes between the US and Europe on encryption and digital taxes. We'll also see the first wave of creators experimenting with VO3, Qwen Image, and other August releases, giving us real-world feedback on how these tools fit into workflows.
Longer term, keep an eye on Google's $9 billion data center buildout, IBM and AMD's quantum partnership, and the slow but steady march of humanoid robotics. These aren't overnight stories, but they will shape the infrastructure, alliances, and capabilities of the next decade.
And finally, a note of perspective. The news keeps coming, and it can feel overwhelming. Within it are both amazing opportunities and real risks, and our goal is to help you see both clearly. The future of technology is unfolding faster than ever, and together we can navigate it with curiosity, clarity, and optimism. Join us as we continue this journey.